please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So it's been a bit of a rough day for the market. This is of course in line with the global cues because now as we speak the cuts are getting deeper in the Western markets and the market is preparing for a bit of a slam dunk overnight in the US market itself, and that of course has been a bit of a catalyst for market of late. Rahul and Prakash with us for BTST calls. Prakash, you go first. Thoughts on index and stock specific calls?
So far looks to me some kind of a pressure in the upper regions, Anuj. Nifty has broken 10,787, so that becomes a resistance now. So possible target in the downside could be in the vicinity of 10,740. So that's looks like there will be a cut available on Nifty. And Bank Nifty, very good chance that can see a slide to around 26,450 or 80 zones. I have two stocks, both on the downside. Bank of Baroda looks weak, can see a slide to 110 zones, stop about 117. It's STBT. And so is the case with Motherson Sumi, again looking weak, slide to around 280 possible, stop about 293.
Okay. Rahul, trades for the last half hour, positions that you can carry overnight?
Well, first of all, I think on the index trend, unless we break 10,700 on a close, I would not review the trend. I continue to believe we're more of a consolidation and still trotting up medium to long haul. So one should hold one horses on the trend over there. Stock specifically, I mentioned SBI with that 261 stop loss, but two specific ideas. One is Reliance Industries. I would use declines to continue to buy into Reliance, 985 being a stop. We could go long on Reliance Industries. I think we'd move to about 1,060, 1,070. Those are reasonable targets to expect. Short term may not come necessarily in one day, a few days down. RBL Bank, another stock which has been outperforming, I would buy there with a 585 target, 547 being a stop.
Okay, that's some BTST calls, of course. Stock which is surging is Ultratech Cement, up about 3%. But again, we've seen some of these names flattering to deceive of late. Mr. Hussain, thoughts on Ultratech? Up 3% right now.
See, Anuj, in fact, all the cement stocks seem to have bottomed out, and more especially the cement stocks, which have a capacity of more than 10 million ton or plus. I am not including Ultratech in that category because Ultratech is a 105 million ton capacity. But the best part is that the Q1 numbers are likely to be better than Q4 because Q4 and Q1 are always seen to be the best. And even in, with onset of monsoon, the things are yet to reach in the northern belt and there has been good offtake. And I don't think that one should really keep a view on cement stocks only for a couple of months, or may build the negative view after the correction starts happening. Once these short coverings and this renewed buying which we have seen at the lower levels, we are keeping in fact positive view going ahead on all the larger cement stocks for next maybe 1 year view, which includes maybe Ultratech Cement, Shree Cement, Dalmia Bharat, India Cement, Ramco Cement. In fact, all of them are qualified to be the good buy. One can add JK Cement also in that category. So I think that the value buying is seen after all the cement stocks across the board seen having bottomed out.
All right, Mr. Hussain, thanks a lot. Always good talking to you. We'll have a chat with you tomorrow now. For now, Anish Damania is with us from IDFC Securities. Anish, hi, good afternoon. Thanks a lot for joining us. You are having a nifty range of 11,550 to 11,980 for FY19. But right now the market's stuck in a much narrower band for last few days and weeks. Your thoughts on the bit of comatose situation that we have on the index right now?
Yeah. So if you look at it, when we wrote that report, we were closer to these levels. As such, and we had set a band which was not too much far away from these numbers. So it's a 1 year band which we are looking at. So this year, most of the analysts are looking at a 24% growth for Nifty, and we feel that given the headwinds of continuous selling by the FIIs, the gains are going to be restricted as far as the Nifty target goes. Also, EM markets have been seeing continuous withdrawal of funds from FI. So, keeping that in mind and keeping the fact that domestic inflows continue to remain strong, though probably you might argue that the pace of fund inflow might vary from quarter to quarter, but still domestic inflows are strong. And given that, you will see upside in the Nifty, but not that much of an upside. And our call is that the market is going to continue to trade in a narrow band. Within this narrow band is something where you need to find how you have to play the stocks.
Absolutely. So coming down to that, Anish, you have some very interesting themes when you've picked out stocks, calling them gems in a rubble. So these are the, I'm guessing, the interesting value plays that one can look at. And then you have a separate category that's continue to ride the horses that have delivered. So I'm going to look at the gems in a rubble, and an interesting one caught my eye there. That's HPCL. Now, given all the heated commentary around oil marketing companies, crude price is high, we're getting into elections, so one doesn't know how much of pricing flexibility and freedom will remain. I mean, are you worried about any of these risks, or do you think that it is really indeed a value pick?
I just wanted to come here. When we wrote that report, we had definitely put HPCL in, but given what's panning out, we have now kind of removed that some time back. Okay. So HPCL is something where we always had a struggle to see the earnings growth come through. Our main theme is that the companies with earnings growth in the near future and continuing earnings growth are the ones where we need to put our monies in. And our theme is a framework where we say that, look, from FY18 onwards, the market has kind of turned its head towards companies which have shown earnings growth rather than only quality. So as a result, we have tried to put our picks into two baskets. One, those we feel will continue to deliver earnings growth and therefore continue to deliver more than market returns. And secondly, identify those kind of stocks which have underperformed, maybe by reasons of one-off company-based factors or like GST or demonetization or what have you, and have caused an underperformance for that particular year. And businesses remain strong, and as we go into the next year, they'll start picking up in terms of their momentum. So these are the two buckets which we have created, and that's why we have these names. HPCL was there at that point of time, but we have removed it now.
Okay. How would these two stocks classify in that case, Maruti and Motherson Sumi? Maruti, of course, has been a much more secular story. Motherson Sumi has become very volatile of late.
Yes. Correct. So I think we continue to believe that Motherson will deliver on its earnings trajectory. There has been news item relating to the trade wars, and last week Trump had said that if EU continues to impose duties on US goods, then US might think of imposing a 20% duty on the cars which come from Europe. And obviously Motherson's customers have a large exposure to the US. So that's why you have seen the stock come off over the last few days on the basis of that. Also, the stock has been weak, partly also because of the fact that over the last 2 quarters they have shown some deceleration in performance. But we believe that it's a temporary phase, and we have seen that happen a few times in the last 5 years for Motherson, with the trajectory only becoming more positive given a little bit more time. So we continue to believe that right now they are in a ramp-up phase. So they are taking on the costs, and we expect over the next 2 quarters that ramp-up phase to actually start yielding operating economies, and therefore the margins also expected to improve, and the sales momentum also expected to pick up.
Okay, we're laboring on this, but the stocks are really interesting, Anish. So allow me one more. What also caught my eye was Dabur. I don't know if it's still part of that list or not, which is continuing to back the horses that are riding high, because a lot of its peers have also done well. The consumption universe as a whole has held up very well in this market. So then why Dabur? Why not any of the other peers?
No, so we had included Dabur, and when we had included Dabur, after that it has kind of delivered significant returns. So to that extent, I would say now it has gone into that expensive territory where if it comes off a bit, I think we should be investing into that stock, because we feel that it will over the last 18 months, it has continued to deliver earnings growth better than what the market expects. And we feel that that trajectory is going to continue in line with what is happening with the other consumption peer group. If you look at Dabur, it had underperformed for 3 years in terms of its peer group. For some reason or the other, first it started with Patanjali, second demonetization, third GST. So you had 3 bad years for Dabur, yet they grew by about 5 or 7% during that time. Now all those fears are kind of gone, and we therefore feel that they will go back or they are going back onto their normal plus growth trajectory. And therefore, we have seen a sharp outperformance of Dabur, and I think that should continue for some more time.
Okay, you have Aurobindo as one of the names that you like, but I wanted your thoughts on this pharma rally, and do you think it's one of those which would flatter to deceive, or is this the real deal this time?
I think it's flatter to deceive, because clearly we are still seeing pharma as a play where you are trying to catch the 52-week lows kind of bottom, and that it's been bottoming out, and then factors like Sun Pharma now receiving its Halol plant approval, the depreciation of the rupee, all kind of saying that okay, now where the things have bottomed out for the pharma sector as a whole, most of the investor universe is underweight pharma. Having been caught on the wrong side in IT, they probably don't want to be caught on the wrong side in pharma sector. So what I have seen is people have started either going less underweight or neutral weight pharma, and that meant a lot of incremental buying into these names. I think that is the reason why bulk of the stocks are up. And given that there still exists uncertainty on most of the companies in terms of their sales trajectory in the global markets, we feel that this rally kind of is getting done. May not be done fully, but it's getting done, and we would only like to choose names where the risk is the lowest. And I think Aurobindo in that category is where the risks of disappointment are the lowest, and therefore it figures in my top buy list. Okay. And also we see earnings growth at about 16 to 20%.
So finally, Anish, these days we keep hearing this in the market that you'd probably be better off for the next several months sticking more to large caps and mid caps. I mean, there's still, I think, some fear psychosis out there after we saw casualties like 1% today. I mean, KRBL has fallen 19-20% despite the company's sort of claims and clarifications. What would your advice be with respect to picking mid caps? And would you say it's better to buy large caps at the moment?
Actually, we have been buyers of large caps for the last 1 year. In the middle, 6 months, we got completely rogered by recommending large cap over mid cap, because mid cap had a fabulous run in the first 6 months of our call. But I think now that I look at it in hindsight, probably that call was okay. And large caps have kind of outperformed the mid caps by about 7-8%. And I think given the way in which portfolios are getting structured, more affinity towards large caps. Also, we are seeing one side, which is the FIIs, who had got into a lot of mid caps over the last 2 years, are sellers in this market. And obviously, you don't want to be seen buying mid caps, especially at a time when there is restructuring which has happened with respect to domestic portfolios, where you have defined the level of mid caps. And typically now you are more oriented towards large caps in your funds. And therefore, and if you look at the large caps, 48% of Nifty is covered by 8 stocks, and therefore you're seeing more and more people gravitating towards an HDFC Bank or Reliance, where you had lesser weight and you want to go at least neutral weight on those companies, so as to fall in line with the large cap strategy.
Okay, but before we let you go, I wanted your thoughts on NBFCs. We of course have Bajaj Finance and Finserv in a different league altogether. But what about the rest of the pack?
I think if you look at the PSU banks, they have completely given ground to all these all these players. NBFCs are more nimble-footed, and they can cater to a vast majority of the clients which probably the public sector banks were catering to. So that is one area where you are seeing the NBFCs gain ground. Also, second area where NBFCs are gaining ground is, they are kind of hitting pockets where earlier were dominated by unorganized lending market. I think that is continuing to go in their favor. Third thing which is going in their favor is the demonetization, and the GST has brought in a lot of informal economy into the formal economy, and that has also helped these NBFC guys lend at a better pace than in the past. So we feel that party will continue. NBFCs will be able to weather the shocks of rising cost curve for them as their businesses become more robust on the lending side.
All right, Anish, always good talking to you. Thanks a lot for your time today. That's the IDFC Securities view. By the way, just look at Tata Motors now. 6% gone on that stock, and in fact, falling further as we speak. So fresh intraday low is what we have on Tata Motors. The other stock which is seeing quite a bit of decline, still in the green. I just want to make that point, but intraday decline is Canpin Homes. Just pull out that intraday chart on Canpin Homes and you'll see that stock right now seeking lower levels. Prakash, your thoughts on Tata Motors and this big decline?
Tata Motors, I think, is weak, looking very weak, I would say. Not just weak, because the way it's trading looks like it can even breach the lower levels that we have seen recently of around 285. I think go lower than that. I think it's weak. It's good short. Even now, stop about 295 and trade short. Get more levels, much more money tomorrow.
Okay, it's 300 has become sort of fairly distant for Tata Motors in the last couple of hours of trade. Let's take a break on that note. We will come back. We still have 20 minutes of trade left. We will count down to the close. Welcome back. I was just looking at a lot of the European auto stocks that are all trending down. So 2.5% on Volkswagen, Daimler is down about 2%, Peugeot is down about 1.5%. So yeah, it's auto wars that are pretty global in nature, with all this talk of trade wars and tariff wars. On that note, let's welcome in Deven Choksi. Deven, good afternoon. Always a pleasure talking to you. This is what we've been debating, on the show. The 6% drop in Tata Motors, how much is it because of the international headwinds and the noises that we are hearing in markets like China? And how much was it because of what the company said in the JLR call? What's your sense?
Good afternoon. Well, I think it's a combination of both the factors. Daimler-Benz gave the profit warning other day in the last week. And at the same time, I think this is related to China, and most likely, I think many other companies.
Okay, I think there's a slight
dependency on the Chinese market. And should they also give some kind of a profit warning? I think the derating of the stock is something which one can probably only ask for. At the same time, JLR has indicated that they want to invest about 40,000 odd crores of rupees on a yearly basis for next 3 years. I think both these factors are combined together, and as a result of which I think there is an element of uncertainty, elements of profit fear in the minds of investors. And that's where the stock prices are down. Not too sure, I think, in this kind of nervousness, how much further the fall it can extend. Because more than fundamental, I think it's collateral damages which is happening and resulting into the actual investment portfolio fall for many of the investors.
Okay, Deven, let's do one thing. We are having a bit of a problem with the connectivity. We'll just sort that line. In the meanwhile, let's get an insight into dealing room chatter. Then Nimesh Shah is here with Trader Talk. Nimesh, big pain in mid-caps right now. The index may not reflect that, but obviously, you would have spoken to dealers. There would be quite a bit of pain there.
Yes, Anuj. In fact, that it looks like that portion is clearly getting cleaned up from the HNIs and from the retail category. So that pain continues even in today's trade. But if you look at overall markets as well, clearly there are these fears of trade wars, which is pushing all the Asian markets down. And not only from a sentiment point of view, even in terms of flows, if you look at the data, it clearly shows that the money is clearly moving from emerging markets and Asian markets to the mother market, which is the US market. Even for last week, there was $5 billion of ETF outflows from Asia itself, and that was the largest since 2017. So clearly there is money moving out of emerging markets and Asian markets to the US markets, and that's impacting the flows into India as well. So that's giving some pressure, pain points in the large caps. But as you rightly pointed out, it's across the board, whether it's mid caps, small caps, all under pressure. In fact, there was a interesting observation from one of the dealers that all the 22 ETF stocks, which is part of the Bharat 22 ETF, they are under pressure today, whether it's Axis Bank, L&T, not only the PSUs, but even the private stocks are under pressure after the ETF got closed on Friday. So that pain is also adding up to the Nifty fall in today's trade. The only space which looks like a bit of a defensive is pharma and IT. So some bit of buying comes in, both from the domestic and FIs, but that's very minuscule, so to speak. The other sector which will be in focus will be the PSU bank stocks, all getting hammered today. There are reports suggesting that the 11 PSU bank chiefs are going to meet the parliamentary committee tomorrow. So maybe there is more, with regards to the NPA crisis, which might come out in that meeting. So maybe that's the reason why the PSU banks are under pressure. But broadly, it's across the board selling coming, whether it's mid caps, small caps, or the ETF stocks, all under pressure in trade today.
Absolutely, Nimesh. Thanks for that. Yeah, even I'd want to see the FII numbers. I mean, we've gotten used to 4-digit sell numbers on a daily basis. In fact, just looking at the data, guess what? In June, there are only 2 green days, 2 FII green days. One was the 4th of June and one was the 21st of June. 21st of June, I remember, was one of the big deals in, I think it was Adani Ports. There was an FII buy-in that happened, which is why we got that positive figure. Otherwise, the numbers have just been difficult. 9,000 crores of selling so far in June. We still have a couple of days to go. Anuj, I mean, the market now, I don't know, I'm trying to pick silver linings, but not quite sure. Something like ICICI Bank is only adding to the bears case, 3.5%, 4% down.
I won't even worry about the FI selling now. For me, the big worry still remains. In 2017, the kind of DII, inflows
that came
and
through.
that too, 2017 was the year in which you could have bought basically anything. The market would have been forgiving. And 3 or 4 days later, you were sitting on 30% gains, 40% gains. And a lot of that money has not seen correction. And I dare say, I'll say one more thing. A lot of those fund managers have not seen correction. We have a lot of second generation fund managers, Ruby, people in their late 20s, early 30s who have made it big last year. They have not seen, a correction or forget about a bear phase. So what you're going through right now is a sharp crunching fall in mid caps. Trust me, this is not a 10,800 market. You ask people with portfolios, they will tell you, these are some of the names flashing on the screen. And, good quality stocks are down 7-8%. And you just, how many folios, for example, would be having stocks like Idea as well. They are down. Sundaram Finance, these are blue chip stocks that we're talking about in the mid cap market. Motherson Sumi is as blue chip as you can get. One thing which has happened is that also it's becoming a bit more insular. As in, you have to focus on only the domestic facing stories. That's where some of the safety spot is. Stock like Tata Motors will take you to cleaners. So let's see. Things are looking slightly off, especially in the broader market. But the range is still intact. And today we're talking about all this. Tomorrow, again, we could be talking about, is this a breakout? Because the market so far is respecting that range.
I take your point, but I shudder to think what will happen to mid caps if the range does break on the downside. But anyway, I mean, that's I think, a discussion for another day. As of now, we're still in that 200-point band. On that note, let's get you some market opinion. Earlier in the day, we were in conversation with Ajay Srivastava, CEO of Dimensions Corporate Finance. Asked him about his view on this consolidation patch that we are stuck in, and of course, the stocks in the sectors that he likes at the moment.
Market has got into a very nice, I call it the ketosis stage of existence, which is just stay with what is performing. Don't look too deep into turnaround candidates. This is a stage of the market where you can make sufficient money if you just stick on to what's done well. You don't need to go and delve deep, find the last, diamond in the mine, which is the lowest rung diamond, may turn around, may not turn around. So there is no need to take needless risk. Now, what you have is what you will have to live with. That's fine with us. But I think going forward, it's a very clear market of performers. And I think we have a background to that. The background is, look at the US market, look at the US economy. That's growing leaps and bounds. Now, companies who can profit from that, obviously IT companies have done well from that. Look at Indian market, interest rates are high. Most small and medium are leverage companies. They will get hurt. Credit delivery mechanism, government is already aware, is a major issue right now in the market. They're going to get hurt. The banks, barring 5 banks, everybody's going to get hurt. If you start arresting MDs of the bank, You cannot imagine, will a DGM today take a decision which may haunt him when even he is an MD? So, you know, we have a persecution scenario which will preclude credit delivery to the small and the mid cap particularly. The auditor issue is now coming up, Anuj. You know, most of the people are calling us and saying, now what happens if my stock has an auditor issue? And I think that's a big fear now stalking the mid cap is suddenly auditor resigns, you lose 70% of your portfolio. So mid caps have their own set of credit issues, auditor issues, market issues, and I think some of them which have performed well will keep on going well. Some of them which have not performed, I don't think so we'll see a traction in the next 12 months.
However, on the index, do you at all see this 100 to 100 point range breaking either on the way up or on the way down? Because triggers have come and gone, and the market, the index has not moved.
I think that's great part. I think that's great resilience, because this is a time when the index held firm against all odds. We are consistently seeing FPI selling day in and day out. Still it's holding. And the reason I think it is holding perhaps is a lot of churn is taking place in people's portfolios. People who are underweight on large caps are now moving to the large caps. So there is a lot of buying, pent-up buying in the system. By and large, retail investor of India did not buy large caps. They were the mid-cap story. I think that's changing. So you got a lot of demand which is coming into the system for the large cap, which is what is holding the index firm, which is why I said so far so good. But the issue is liquidity. I think that's what is creating this thing a problem here. That if liquidity dries up, for whatever reason it can dry up, and we already seen the savings to GDP ratio under a bit of a problem. We are seeing competitiveness for branch deposits, bank deposits. Now that's a bit of a problem. So if you flag in liquidity risk, that's the only big risk for the large caps. By and large, they're safe and sound today in spite of such large selling on FPIs.
Your thoughts on LIC taking over IDBI Bank? The government has been trying to sell IDBI Bank for the last 2 years. Private companies have not shown interest. And now it looks like LIC will bail it out, but this time with policyholders' money.
If you were an LIC policy holder, you would tend to worry today saying under which portfolio are they going to keep this dog there, man. I can't believe it. I think we have to get out of this syndrome of subsidy, cross-subsidy government, which is why PSU stocks don't give you returns. If you look at commodity stocks of PSUs, look at NALCO, look at NMDC, they are so dirt cheap. There's no comparable in the world. And the only reason is people have a doubt in their mind that what next will come to these companies, which burden they will be thrust with, will they be merged with something, etc. This is the craziest thing I ever heard. IDBI Bank, let it go, let it get merged. You remember Bank of Punjab got merged with HDFC Bank long back? It happened. Centurion Bank got merged very nicely. So Bank of Rajasthan got merged very nicely. What is holding the government back to say, let's just merge these banks wherever they go, whatever the equity value they get is fine? This is crazy, absolutely crazy.
How do you define this move of late in the pharma pack? Is this just a case of market realizing, look, there's one big sector which hasn't made a move and there is value, or is something fundamentally changing here?
No, I think things are fundamentally changing. That's one. Number two is, as always it happens, when we become bearish, we become totally bearish in a sector. Most of the stocks in pharma are down to 2 to 3 times book value. Typically, they should trade at about 7 to 10 times book value. So you got almost a 50%, 100% cushion there, sitting there of the price upside that you can expect. Number two, people have now seen a steady story like IT, that when it starts to move, the momentum takes it forward. Which comes back to the point. This is a market for momentum. This is not a market to value. So when pharma is now into momentum, 3 times book value, 2 times book value, highly cash flow generating companies, leverage is not strong, US is stabilizing, there is no reason not to go in there. So I think this is a story still unfolding. Lot of way to go. Lot of private equity interest in this sector. Believe me, a lot of private equity interest in this sector. Most stocks are undervalued. So you are in a very safe territory, even if you board the bus today for the pharma.
Wait for me, world, wait for me. Wait for me, world, wait for me.
Attic Fittings make your furniture work beautifully. German quality you can trust.
Jesse choice, सबकी मिलेगी choice. मकान या building office, सबकी मिलेगी choice. 1, 2, 3, 4. foresight, BHK, bungalows, villas, flats, hot gear. Whiskey, Jesse, Joyce, सब की मिलेगी Joyce.
Okay, 5 minutes to go. Whichever way you cut it, it's not been a great day. We're down about 65 odd points on the Nifty, pretty much the lows of the session, and lots of stocks on the way down. I mean, forget Tata Motors, the OMCs, ICICI Bank, marquee names like L&T, Reliance has not quite managed to play, the upside for the bulls. Asian Paints, ITC, there are lots of heavy names on the way down today. Devin, let me take your thoughts on a stock like ICICI Bank. I mean, just when perhaps at least traders began to get excited, thinking maybe there's a bottom in the making and the worst is priced in, it's again running into rough weather. How do you look at ICICI Bank now?
Well, I think I would say that the fundamentals of the bank probably will take time to change. I think even if the new management comes in and the strategy is built in, it will take at least few quarters, after which you will see the change in the fundamentals of the bank. Having said that, I think the near-term possibilities that one would probably see is the NCLT-led proceedings which are coming into the books. That could definitely, I think, repair the balance sheets of the bank, I think, for good. And that's the reason for which I think the traders are excited. But as I said, I think to get the real profit reflected into the books, I think it will be few quarters away, after which I think one could take a call. So till that point of time, the stock should have the trading range. It should be, I think, largely range bound, and depending on the market mood at such point of time. But as of now,
Okay, Devin, I think we have you on a bad line. I'll have to thank you on that note, not working that line. Prakash, I wanted your thoughts on a stock like Motherson Sumi. How would you approach it now?
It's a sell for tomorrow STBT. Oh, it looks weak. The way it's trading looks like it's heading down to levels closer to around 280 zones or even 75. I wouldn't be surprised. Only thing is I would have a stop about 293 and trade short and sell as much as you can. Looks weak.
By the way, the rupee is down. It's still trading above a level of 68, but nothing out of the ordinary, because almost all emerging market currencies have been down about 0.5%, if not more. So we're in step with the global cues. Rahul, on that note, let me bring up IT to you, because what's happening now is that the mid-cap IT rally seems to be under question. I'm still seeing names like Mindtree down 3.5%, Firstsource is down 2%, NIIT Tech is weak. Large cap names like Infosys, TCS, still there's some buying. Any trades you'd advise on IT?
Most of the mid-cap, you're right, seem to be petering off, in the sense they've become more sideways to negative. So, like Mindtree, etc. They're not at zones where I would probably be very excited to buy in. They're not at points which they're either breaking out on the upside. But I think the way you have to take it forward with the heavyweights is you've got to continue holding on to them. There's no negative signal in them. They're still probably good for the next 4 or 5%, but I think the upside is capped if you're looking at just the near term. So whilst I'm positive on it, it's probably not a point I'd like to just start stepping in.
Okay, well, we've just got 2 minutes to go, so let's start winding out this day. Anuj, not much buying from the lows, and the mid-cap index is down almost now 0.75% as we are ending off.
Once again, so just to repeat the point, this month, Surabhi, the Nifty is 0.2% this month. And at the start of the month, if you've taken a position either way, you're 0.2%. Mid-cap index is down 2.4% this month. And when the mid-cap index is down 2.4%, obviously the portfolios are down a bit more. So in that way, it's been a bit of a rough month for the broader market. But on the index, that range is again being respected. And tomorrow, what will be interesting is tomorrow you may start lower, but then from lower levels, because once again you'll be very close to an important support market may start to rally. And that, I think, process may continue for some time. Well, in terms of individual stocks, Tata Motors really was the stock of the day. 6% lower is what we have on that stock. HPCL was down 4%. Really, the back of the bulls today was broken because of ICICI Bank. That was one stock which sort of got its mojo back, but clearly at 300, well, everything is in the price, and that stock starts to fall again. Larsen & Toubro, Coal India, Dr. Reddy's, Axis Bank, State Bank of India were the other prominent losers. On the way up, Ultratech Cement was up 2.8%. Bajaj Finance made a new all-time high, so 2.5% higher on that. Infosys made a new high, so that stock was up about 1.7%. And HDFC Bank was up a bit.
And the mid-caps really a sea of red, I'd have to say, over there. Today's big news-based casualty was KRBL, 20% down. One of the directors being questioned in connection with the Augusta land case. So that was a stock that just never recovered. The Tata Motors DVR, by the way, is ending down with a heavy 8% cut as well, almost in line with the main shares. PSU banks were absolutely a no-go area today. Look at Allahabad Bank, about 7 to 8% down on that stock. Union Bank, 4%. Canara Bank, 4%. Andhra, 4%. I mean, it's just a long list of losers on the PSU side. OBC, mostly padding names. Big stocks fell today. How do you look at this? I mean, Ashok Leyland, 3.5% down. Century Textiles, 3.5% down. We have seen selling in Motherson Sumi, 5.5% down. No buyers, by the way, queuing up. Even at these kind of lows, most of these stocks have ended at the lows of the day. We have seen continued selling in Sun TV, 4.5% gone from that stock. NCC was very weak today, 4% down on an NCC. Count in a Sundaram Finance, 6% down on that stock. And then some other names like Heritage Foods, etc., which were also weak. J Kumar, while we're talking NCC, J Kumar Infra is down 5% as well today. Lots of damage on individual mid-cap names. If I talk about the upside, then obviously the stock of the day is PNB Housing Finance. Traders very excited about the possible outcome of that stake sale as and when that happens. 14% on that stock, no shake-up whatsoever. Then some odd outlier names like a Kiri Industries, 6% up. KC International had a good run today, 5% on the higher side. TVS Motors was a smart mover, 2.5% up on TVS. I'll quickly round up mid-cap IT. Largely down, barring Tata Elxsi, which is up about 2%. NIIT Tech tried to recover from the lows of the day. It's ending at the flat line. Some recovery, but not quite enough. There you see, absolutely flat close. But Hexaware, First Source, a lot of these other names, Mindtree, all of these stocks have had to deal with some pressure today. So that's how sort of the rankings are stacking up on the mid-cap side of the market. Largely bleak. I mean, barring a couple of the odd stocks, if you happen to be in the right ones, Anuj. But even some of these giant mid-caps, I mean, like a Leyland, Motherson Sumi, I guess there's a lot of pressure even there.
There's some problem. I think last month, it got dismissed as, that mutual fund portfolio shuffle thing.
Yeah. Oh, that's all over.
That's all over, right?
Yeah,
So obviously, there's still something which is bothering the market. Yeah. Look, again, Surabhi, all of this has its genesis in 2017. 2017 has colored everyone's view. Markets move. And then markets have a year like 2017, and then markets have years like 2018. This is a year of mean reversion, and the sooner we realize that, the better it is. At index level, perhaps, my only worry is, would the index follow the mid caps now after this kind of, consolidation that we've seen? Because obviously, at 11,000, there's some resistance for the market. This is the market which at index level is so close to all-time high, but in individual stocks, obviously, there's been some bit of problem. So. Let us see. I think over the next 1 month or so, this range will break. We'll find out whether on the upside or downside. But this cannot continue for too long. This, 250, 300 point band on the Nifty.
Absolutely. So closing thoughts, just quickly, Prakash. Looking at today's range, the kind of movement, what would your advice be for tomorrow morning?
Tomorrow, if it opens the gap down, perhaps that we can see an up move. But there must be, I would say that 10,800, 10,820 seems to be a strong resistance zone to negotiate with. Once it crosses 10,820, then maybe we'll see a trending up move there. But looks like a range-bound day. We are seeing a contraction today. Perhaps some half day tomorrow contraction is possible. On the Bank Nifty front, 26,460, 500 zones is a possibility slide, and resistance around 26,700.
Rahul, how should the intraday trader approach this market now as we move towards expiry?
I think I'm very clear that unless we break 10,700 on a close on the Nifty, I don't think we need to really review the trend. Yes, I think people are getting a bit impatient, the fact that we've kind of hung in between 10,700 and 10,900. We've not been able to break out. But I think one has to bear in mind that it's still an uptrend. It's still a market making rising bottoms when you look at the major primary bottoms. So I think let's not jump into big conclusions as of this state. We could drop. But we need to wait, let 10,700 break, let another important level of about 10,540 break down. These are two very key numbers on the downside that can always act as support. So I think don't jump the gun. You have a lot of stocks that have really depleted in terms of value, which can always play comeback mode. And you know, specifically as I was sharing ideas, Reliance, SBI, if all of these start picking up from their strong support levels and once again kind of move up, there's always a case to be built that we make a new high. So things can change fairly rapidly. One has to hold one's horses.
Okay, gentlemen. All right. Thank you very much for taking us through market close this Monday and ending in the negative. Let's see what the rest of the week has in store. Right now, we need to take a very quick break. But when we come back, what does the Maharashtra government's statewide ban on the use of plastic materials means for you if you're in the state, if you're in the city of Mumbai? All the details coming right up. Welcome back. The Maharashtra government has enforced a statewide ban on use of plastic materials. Let's get in my colleague Ashwini to understand what all is now completely banned and what is it that you can still perhaps use. Ashwini is now joining in with all the updates. Do fill us in, Ashwini. How is the state coping?
The Maharashtra government has banned the use of single-use plastic across the state. But there's still a lot of confusion amongst people about the items that are allowed and the items which are banned by the government. So I have a list of items which are banned. So first of all kinds of shopping bags are banned, the plastic shopping bags. Then it is irrespective of their shape, size, with or without handles are banned in the state. Ziploc bags are also banned. Carry bags which are bought from the duty-free shops are also banned, so they have to be deposited before entering the city. Single-use disposable plastic items are banned, such as your cups, plates, glasses, spoons, basically what items which are used by the hotels. Thermocol is also banned, so any form of decoration or for non-industrial use is also banned. Your cellophane or BOPP plastic used for covering flowers, bouquets are also banned. So all these items are in the banned list. Now what are the items which are allowed? All kinds of plastic packaging if packaged at the point of the manufacture. So your printed, laminated packs containing your biscuits, wafers are allowed. Single-use PET bottles are allowed. All sizes which comes in 200 ml, 500 ml are allowed. Tupperware items are also allowed. Gloves and hair covering woven caps used by restaurants are also allowed. So, but still, what we found on the ground is that there is a lot of confusion amongst the people. The list is not easily available to the people, and therefore they are not sure which items are allowed. And also the alternative to this banned plastic items is also very expensive, and they are finding it difficult to replace these existing plastic bags with this eco-friendly cheap alternative that is available.
All right, Ashwini, thank you for that. Now, of course, the plastic bag manufacturers are definitely not a happy lot. Ashwini also did catch up with Nimit Punameya, the Secretary General of the Plastic Bag Manufacturers Association, on the impact of this ban.
The current impact in the industry is we have, almost 2,500 factories have closed down. Almost 300,000 people or 3 lakh people have lost their job directly. Indirect unemployment would be more than 1 million people. And almost 15,000 crores worth of investment has gone, is of no use right now.
Right. So what is that you're asking the government now? Because you had been given 3 months time to get rid of your existing stock and come out with some alternatives to plastic. So what is that right now that you want from the government?
Ma'am, we had requested the government that the current regulation of 50 microns should be in place. We have requested the government that the alternatives are not good for the environment. So we've requested the government to give us at least 7 years time to phase out this product in a phased manner. And then we get, by that time, we'll have some alternative products in the market.
Now the ban is already in place. So what is your next move? What are you planning to do with the jobs that have been lost, the industry, the impact that your industry has taken? So what is the next step that you're planning to take?
So actually we are still hopeful, like we are in continuous talk with the state government. State government had deputed an expert committee. I was also part of the expert committee, and we have made a lot of recommendations through the expert committee to the empowerment committee chaired by Shri Honorable Ramdas Kadamji, the Minister for Environment. And I hope there is a meeting on Wednesday on 27th of this month where a lot of products may be removed from the ban of this current position.
So if you could tell us what are some of the products that might be the ban might be lifted on them, what are those?
So something like all those bags used by Kirana stores or your small industries or like Lijjat Papad and all. I mean, those bags we are hopeful that they will be removed from the ban.
Okay, and the meeting is on 27th?
Yes, the Empowerment Committee meeting is on the 27th.
Okay, so this is still a matter that's under some amount of discussion. Now, staying with some stories from the city as Mumbaikars battle heavy rains, a structural failure only increased the city's woes today. A part of Lloyd's estate compound caved. This is in Wadala in central Mumbai, and there was a fair amount of damage, including damage to vehicles. CNN News 18's Chaitanya has more details on this.
Well, right now I'm here at the site where the wall collapsed at around 4 a.m. and around 7 to 8 cars, in fact, are expected to be trapped under the debris over here. So that is the situation. It is exactly behind me where I'm standing right now. However, the police officials have asked us to move away from that area as it is a bit risky. Now the commissioner, an engineer, in fact, appointed by the court also visited this particular spot and have assured the residents that the building that they are staying in is safe. And on the other hand, the police is also in the process of registering an FIR based on the complaint made by the society secretary. However, several other parts in Mumbai have experienced waterlogging, especially in the eastern and western suburbs. There is waterlogging in many places, including the Sand police station where we visited. So all these places are experiencing waterlogging. However, the rain has somewhat subsided. But then if it rains in the next couple of hours, then the situation will definitely turn from bad to worst.
Okay, so lots of stories from Mumbai today. Let's now move to the national capital. And a big win for the citizens of Delhi. The controversial project that requires cutting of about 17,000 trees in the city to make way for government officers' houses as well as a commercial complex has been put on hold by the Delhi High Court today. CNN News 18's Sahil Meghnani has more details. Sahil?
So this is what happened in the Delhi High Court today. A very crucial public interest litigation came up before the court. In fact, it was filed on Friday. That's when the court had issued notices to all the relevant stakeholders, including NBCC, which is directly responsible for implementing that decision. Today, the Delhi High Court very categorically asked the NBCC what's the dying urge for implementing this step, because anyway the matter will be coming up before the National Green Tribunal on July 2nd. So can't you stop the process till then? The NBCC then said, well, the matter has come to the fore, has come to a nation's attention because of the fresh string of protests and the kind of media coverage it has received. However, this case went on in the NGT for several years, and it's only after getting clearance not just from the NGT but also from other relevant authorities that they went ahead with this decision and started axing some of the trees from the overall 16,500 trees that they are supposed to in 6 localities in South Delhi. After which the court was very clear that while you have got those clearances, we need to study this matter in detail. They also made the trees authorities, which falls under the Delhi government, a party in the case, and said till we hear from them about the clearances that you're talking about, you can't stall any more trees, and hence there has been a standby, a stalling of this decision that was taken by the NBCC to axe over 16,500 trees at least till July 4th.
Okay, Sahil, thanks very much for that update. So let's see NBCC in focus on the back of that news development. We'll take a quick break on that note, but on the other side, we have all the currency and commodity market action coming up with Manisha Gupta. Welcome back. Let's chat commodities, where we have seen a lot of movement come in, especially the metal space, because copper prices as such have continued to see a bit of a rise. Remember, we were trading at a 3-week lows in the previous week, but there is some buying that has come back in case of copper. One, of course, the US dollar has seen a bit of a pause. The other is China has reduced the banking reserve ratio. And the third is that the Chile Employees Union have said no to the latest offer that the company, or rather Escondida, had given to them. So there are various factors which seem to be supporting the copper prices on your screens right now. But that really hasn't been the case with the other metals, because we have seen the Shanghai steel prices decline today because of increase in inventories. Markets would, of course, continue to keep an eye on the US-China trade concerns. Europe also seems to be joining in. So the US-Europe is going to be yet another sector to look out at. So there's plenty happening in the global markets, which leads to uncertainty and choppiness in all of that sector. Simona Gambarini, commodities economist at Capital Economics, now joins us to talk more about that. Simona, hi. Metal space, how are you reading into that? Because there are just so many moving pieces of puzzle here.
Yes, there are. So it very much depends whether we're looking at industrial metals or precious metals. But in general, dollar strength has weighed on the whole commodity space. So we have seen most metals, but also most industrial commodities falling back following an appreciation of the dollar on the back of the trade dispute between China and the US. That said, we'd always thought that prices would fall back in the second half of the year, so we're not necessarily surprised by the moves. And we expect them to fall further in most cases.
Where do you see a more risk coming in, really, Simona? Because we've seen the zinc prices decline quite sharply. The fundamentals there are not so positive. Would you say zinc perhaps could be one of the metals to see further slides?
Yeah, we don't see it falling so much further. It's one of the worst performers so far this year. But yes, in some cases, the fundamentals are not playing in favor of higher prices. For zinc, we have some of the production that had been cut in the previous years coming back. And at the same time, we expect China's economy to slow down, so it doesn't bode well for demand. But we also see further falls in copper prices, unless there are major disruptions to supply following the the wage agreements. But that's again not our base case scenario. We don't envisage major disruptions. And therefore, a slowdown in China and abundant supply should also weigh on copper prices.
Simona, how much of a further decline can we expect in the metal space from here? I mean, as you said, there could be some more softness. Is there a percentage that you're allotting here?
For metals in general, or for
base metals, for industrial metals?
Well, it very much varies according to the metal. In many cases, prices have already fallen back quite a bit just in the past couple of weeks. So we don't expect prices to plummet. But we do expect in most cases prices to edge down. We have a few exceptions, which are tin and cobalt, which we expect actually to edge higher.
How are you looking at the precious metal space as well? Because while we do continue to see buying on all of those dips, we still have been making lower lows, especially for gold. Since it broke below $1,300 per ounce, it really has been a bit dismal.
So it's a bit of a conundrum, because gold normally performs well when there is a heightened uncertainty, and certainly at the moment that seems to be the case. But then a stronger dollar is also weighing on gold prices, and the dollar and gold can be at times seen as substitutes, and therefore there seems to be more flows into the dollar than gold. It has recovered a little bit this morning, and it seems to be well supported at current levels, but there is quite a lot of speculative activity in the market. Net long positions fell to the lowest level in 2.5 years on Friday, so that certainly doesn't bode well for prices.
Your point is well taken, but are you buying at these levels, or do you see further declines?
We don't see further declines, but we don't see much upside either.
All right. So stuck in a space is what we call gold as. Thank you so much, Simona, for being with us and giving us a sense on what really to expect in the metal space there. But Kishore Narne of Motilal Oswal as well joins in with his strategies and ideas. Kishore, hi. Gold and silver to begin with first. What are you advising for the rest of 2018? What is your sense, especially for the Indian prices?
Good afternoon, Manisha. I think Indian prices have a little bit of support from the weakening rupee, but see, broadly we have been trading in a range of 1,000 rupees for gold, let's say 30,400 and 31,400. That's the range which have been there for the last couple of months. I think I don't see any reason why to break that range, so we are closer to the lower end of the range. So that's why I'm looking to buy gold. Maybe the ongoing trade war tensions also prevents them to fall too much, though there are other reasons like a CFTC position showing that the speculators are unwinding their long positions. Maybe they are at a 2.5-year low and all those things. But I think there are equally pull and push forces at this point of time. But still, I think because we are lower end of the trading range, I think it's a better risk-reward ratio to buy gold close to around 30,600 for August contract, and keep a stop loss of 30,480 for short term, and look for targets close to 30,800. Again, it's a short-term strategy. There are no medium to long-term triggers at this point of time.
How are you looking at the metal space now? Because while, of course, for the Indian exchanges, we've seen metal volumes actually be the savior here, but with the kind of moves that we are seeing in there right now, with the kind of global cues as well, is there a buying opportunity emerging at all?
Yes, I think, see, again, as you mentioned that copper is getting a little bit of support from the Escondida mine, and even dollar has been a main, what you call, driving force behind these commodities. Despite the trade war, I think short term, maybe in a month or so, I think most of the commodities should rally, including crude and base metals and even gold. And for the domestic investors, I think we are not seeing any significant rupee appreciation. So even a slight depreciation also would help a little bit more, provide tailwind on the domestic prices. So I think more or less it's a short-term buy trend in most of the commodities.
And crude oil prices, because we've seen them very, very volatile, 5% of a move on Friday. And of course, today has been a soft day after that huge, humongous movement. But at these levels, would you say that much of the OPEC and the allies meeting has been factored in?
Not really. I think, yes, OPEC has been, we can see it on Brent levels, but WTI is again behaving on its own. The rig count is now, I think, seem to be peaked out, and maybe we might see some decline on the rig counts. I think the market is showing something is a significant backwardation since last, I think, 2 or 3 sessions. There is a significant, more than $1.50, nearly $1.4 backwardation in the near month to second month. So I think that is actually showing there is an absolute short-term tightness in oil. So I think maybe another $1.50, maybe $70 on the cards for the short term in WTI. So I think it's better to buy even on dips or even at current levels for crude. I think I would suggest a June contract, buy at around 4,670 with a stop loss of 4,520 and target close to around 4,750 or 780 per se.
All right, Kishore, the week seems to have started on a better note because there are more buy calls coming in for you today. But thank you so much for joining us with your strategies. And with that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.